do the recording. Great stuff, good people. This is our part 2 of our secrets to trading crash and boom. I really want people to grasp the secrets and do their homework. The intention of Moses Money is to create traders, is not to create people who are making profits. Profits are good, but a trader is even better, because if you are a trader, you can trade any market, and also you can make money anytime. You will never know being broke, because you will always go to the markets and you will do the right thing and withdraw money. Okay, right, so when we closed off, we were talking about secret number 2, secret number 3. Maybe let's quickly recap on our secrets. I'm not going to clear my charts because I don't want us to lose time. We will make this our secret number 1, the RSI. The RSI, if you go to moving into, what's this time frame, 1 minute, go to the last part of the time, the price. How I use the RSI is then when the RSI is oversold, overbought like this. Now you see that the trend, number 1, the trend is sort of an uptrend. We have to check the trend. You can't assume it's from the 1 minute. You've got to check the check the trend, and also check your candles. The last time we had said that we are seeing and noticing a breakout. Remember, whenever there's gonna be a breakout, there will always be a fake out first. The reason for a fake out is that the broker is trying to trap the people who thought it's going to sell. For instance, I'm worried about this trend line that's blocking my price. I always want to see the price. I always want to see the wick of the candle. I don't want to see a tail of a trend line like this one. Okay, let's just do, what are we gonna do? Because it did not, okay, let me move this. Oh, there we go. Now I'm able to see this candle here, you see? This is a rejection candle, rejecting the sellers, okay? But what you need to be wary of in this asset is that there is no supply and demand. There is no actual orders that are placed on the asset. So it is able to go back and forth many times without apology. The only thing it will do is that it will respect support and resistance. For instance, we drew our support line here, and you can see that this candle closed, and it closed above the line. That should tell you something. This tall wick here that it closed with, it also should tell you something, that there is rejection to the sellers. But because you are dealing with crash and boom, this candle here can still, when it reaches to this level here, which is the previous resistance, it crashes. Only that it will crash with a shorter crash like this one, you see? So you need to always be on the lookout and not trade with your eyes closed. Number 1, what is important in this asset is equity. How much money are you trading with? If you are trading with the $100, if you're trading with $300, that is not a lot of money. You cannot subject your $300 to this kind of a crash, this candle going down. It's gonna wipe you clean. So your equity is very important to protect. So you choose number one, am I going to buy crash or am I going to sell crash? What I normally say in group is that you buy low and you sell high. That means that it's not every low that I'm going to buy and it's not every high that I'm going to sell. I'm going to look for certain things to be in place. Okay, now we have established that this is a ranging market. It's not yet trending to any side. It's ranging sideways. We were hoping for a breakout here on the 15-minute time frame, but looks like it is a fake breakout. Okay, right. We go to our 15 minutes. It's the price that's going to tell you what's happening. You are not going to imagine and think, oh, I think it's going to go down. Oh, I think it's going to go up. Look at this now. You see what's happening here? On the 15-minute time frame, there was already a buy trend that is already on resistance because our MA, our moving average 10, works as a resistance. It works as a resistance. I'm speaking right language there. This is how a resistance does. It bounces price down. Whenever price meets resistance, it bounces down. So we are having a point here where there is resistance. You ask me, should I buy or should I sell? I don't know. But if I were you, I would rather sell because this is a high rather than to say I'm buying at this area. You see, some people are very good with their forex. They always say, no, I put a buy, and then it crashes with them and they hold through the losses. It's fine. You can always trade like that if you so desire. But when there's no opportunity in the market, you should see that there's no opportunity. Don't force an opportunity. There's plenty other opportunities. Like here, look at this here. Just this line alone. You make money crashing here. You make money each time it goes back to this line, you sell. Each time it approaches this line, you sell. Because these are buys. The fact that there's a wick here, it means that the price went up. So the price goes up, 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 and then the green candle changes to be red. You sell at that price right there. So at this point, we go to our 1 minute. I think now we see why our 1 minute RSI is on oversold. Overbought rather. You see, our RSI is already on overbought. And this is a sign for us. Whenever our RSI is overbought to the regions of above 90%, going to 99, this is 96, but this is RSI 7. This is at this point where I add RSI 14 because it's more consistent with the percentages of buy trend. When there's a buy trend, how you see a trend, it's a buy trend, the highs, the lows are getting higher. That's the simplest definition for a buy trend or an uptrend. The lows are getting higher and the highs are getting higher. And now what you see is that it has broken the first supports that we had here. So it's no longer a breakout if it looks like that. It's now an uptrend until something breaks it down again. So what you are expecting is our next, it's our next high or it's our next resistance. In this case, you could use this gap here. Remember what I said about the gap is that it signals exhaustion or continuation of the trend. So when the price senses this gap like it did here, it crashed. So now it's buying, it's buying, it's buying again. This is the next strong resistance. It may reach here or it may crash even before that. We don't have control of that. But all we need to do is to check if it crashes, what kind of a pattern is it forming? So that we know that are we continuing with the crash or are we just moving on with the buy? If it crashes small candle like this, it's a signal for us that we're going to continue with the buy. But at this point, as you can see that it is bending over, it's losing momentum of movement here, it's likely that it's going to crash. So this is where I use the RSI. Obviously, you can see these areas here. Let's go to the 5-minute charts. Let me show you how to do RSI entry. This was the previous point of RSI that we had on the 5 minutes. I think this was the 5 minutes. I hope this was the 5 minutes or whatever. But anyway, what you do is that as price approaches your resistance, you prime a sell. So that if it crashes with you inside, okay? So in this case, because we are running away from trading, I don't want us to do that, but we'll see. We watch and see what's gonna happen. Another way, there are many ways to know whether it's going to crash or not. Let me add what, God remind me. Oh yeah, insets another moving average. 200 EMA, I always make it black. You see, the minute you put that EMA, it tells you where the price is right now. It's on the downside. The price, the crash 500 is selling. But then whenever price touches the 200 EMA, it crashes. It crashes. So you see now, the same support that we put here is also represented by this 200 EMA. Sometimes you find that the RSI is going this way now, almost signaling it wants to crash. That normally happens when there's something like this, where there's a meeting. Yeah, you can see the moving average is crossing the Bollinger Band. So this is a sign of exhaustion for the sellers, or for the buyers rather, okay? And so let me just be clear and plain with you. To say it's going to crash or it's not going to crash is just, this is where you lose money, because we have to enter with the hope that it's going to crash when it touches here. If it doesn't crash there, it's going to crash when it reaches this. If it doesn't crash there, it's going to crash when it's touching the Bollinger Band. At least the Bollinger Band is in line with this high resistance here. If it doesn't crash here, it's going to crash here. So you cannot catch all the crashes, and you don't have to be right in all the crashes. You just need to watch and see if you are clear. For instance, if the price was approaching here, I would confidently open a sell, because I know if there's no sell, like here, there was no sell, price went past the Bollinger Band. I mean, what's this? The moving average. It went past the moving average. So because it went past the moving average, I know I was entering because of this. So because it didn't engage here, I come out. You see, rather than to just put a sell, open sell. Why? Because you don't want to be left out. You are afraid it's gonna crash without you inside. Who cares? It's your money that you want to protect. So I'm advising people to not be smarter. Don't think you will always outsmart the market. You can be in a winning position, but if you have a strategy that you are following, Right now, we are seeing an uptrend going, and our what's this thing? RSI, it's almost touching our, this would be our previous high. So when the RSI touches here, this area here, then we enter with a sell. So some of us, out of being bold and small lot sizes, they can now start entering with a sell here. But where we are expecting the sell to actually happen is this place here. Is this place here, this place of high resistance. That's where the sell happens. Okay. I hope you can see now the entry of the RSI. We went a lot backwards just to revise on the RSI. And Renan asked me the issue of fear of losing. I repeat, we all lose at some time. The best of traders, they do have losing positions. But the most time to avoid losing positions is to avoid early entry and late entries. Those two entries are very wrong, because sometimes it is going to come down. Some people will argue, when you enter a sell, some people can enter a sell here. At a certain point, price is going to come down and put you in profits. But the point is, you enter too early. You enter too early here for a sell, you see. And some people will see it crashing, and here, when it's here and they say it's selling, and then they start entering too late as well. So those two things are the ones that are a problem to you, that you need to always avoid. Okay. So now when price is sort of touching here for your previous, you can see I put it a bit lower, but it's sort of touching now your RSI, where you said you are entering RSI for this level here, which is sort of an 80, okay? So you want to enter now at 73.57, but if it crashes, it will crash with you inside. So now the challenge is that it may crash, but it be a small crash like this one, and you'll be disappointed. Or it may crash all the way down and you'll be happy. So it's all up to you what kind of a risk you want to take. But you must always take calculated positions. Why you enter. You must know why you enter. Crash and boom may look easy, but it's very emotional. It can be so stressful as well when the boom is not booming and the crash is not crashing. Even worse when you are on a buying crash and the crash crashes on you. So those are very emotional times. I don't want to be caught like that. So in order to avoid that, then you enter calculated risk. For instance, I said to you, this is my position. This is my position entry here. So in order to catch this position, I do two things. One, I go to the pending orders, market execution pending order. We do a sell limit. Volume 1 is good. The price, we're gonna do it at 9887. Let's try that one. Where's the price? 98, still 10 pips away. I think that's too much. Just crashed. Okay, it's already crashed. So there's no point for me for this because you see it was going to go up here, but now it's crashing on my RSI. But this is a small crash, and that small crash can either be either of two things. That's English, the right one. Either of two things. It can be a prime for a bigger crash, or it could be a crash just for a continuation buy. So go to our 1 minute. And now we are trading. I hate what I'm doing because now we are trading and I don't want us to trade. I want us to learn the concepts and then move forward. Okay. So you can see what is happening here. This is a signal of a buy. I could be wrong, but this looks like a signal of a buy because it crashes below the, it crashes above the MA, but also there is this strong resistance. Oh, the gap. Oh yeah, the gap is our giveaway that it might cause a big crash happening. Okay, so you enter a sell and whatever. Let's move on with that. I don't want to see this page. Let me move this page away. It's distracting us. Okay, right. Let's move to the breakouts. The breakouts, we said this is how we trade the breakouts. This is a consolidation. And on this asset, when there's consolidation, we are consolidating to see how many buyers are there, how many sellers are there. As people start entering and coming out, the market is collecting orders. So if it sees that there are more people who are saying buy, it's gonna go sell. That's how it does. More people are saying this is going to be an uptrend. So they will deliberately mislead you with these kind of movements. And you say, now it's buying, now it's buying. And then it starts going down more, okay? So you must watch for that breakouts. And then the other thing we spoke about is the Fibonacci. I want to show you the Fibonacci, how to actually use it. Okay, let's use a clean chart. There are always setups in the markets. This thing of being afraid of missing out, I really don't understand it. I cannot trade. I can stop trading for the whole week and only trade one day and make my money. So I don't have a problem of worrying about losses. Losing trading time. Okay, this was a consolidation. We call this a consolidation. When you are using Fibonacci, I was with Temi today and she helped me a lot trading Fibonacci, putting Fibonacci on the crescent boom because it's a very different market. Okay, right. Let's try and use okay, can we use this trend here? Okay, let me just be naive. You can find Fibonacci on your cell phone as well. On the tools, you go down, you find this Fibonacci. Okay, right. So we take from the highest to the lowest. You include the weeks as well. Okay, right? There you go. This is the trend. You take the retracement when there is it was going down and then it retraced up. So what you are finding is that where are the crashes gonna be? The crashes are going to be on the either 61.8, 50, 38.2, and even 23.6. Unfortunately, right now our price is still very low. But if we look at the previous price, in this trend going down, when it retraced, because the retracement idea, the Fibonacci idea is that the price wants to continue going down. So before it continues going down, it's going to have a retracement like it did. This is a downtrend going down, 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 and then a retracement, then a downtrend again, a retracement, then a downtrend again. So this helps us to prime our crashes. For instance, once the price is going close to this price of 23.6, then you put a sell on this line, you put pending orders, you prime this whole thing here, and then you put pending orders on this price of these lines. Then you know when the price reaches here, it takes your sell limits on, and lo and behold, it crashes on you. and you are in profits, you come out. Unfortunately, it's not very easy to put TPs here because the crashes are unpredictable. But I wouldn't want to hold on these Fibonacci or Lekuzana positions. I'm running out of time, so I'm stammering now. Okay, right. This was a crash on the 23. This was a crash on the 38. This was also a crash on the 50, going all the way down. Okay, so as long as you are in profits, what you do, what it tells me is